Hello, and welcome to our channel Pursuit of Wealth. This channel is your ultimate destination for learning about finance and wealth, investing and crypto, informational and educational trends in finance management. If you are someone who wishes to become wealthy and are looking for smart money management options, then we are fortunate to have found each other. How do the rich people of our society keep getting richer? That's simple. The billionaires barely pay taxes. Yes, you heard it right. The U.S. Department of the Treasury claimed that almost $163 billion in taxes is avoided by the richest Americans every year. The wealthiest personalities face the IRS, U.S. government agency keeping track of the collection of taxes, but they always manage to escape. They never pay the federal income taxes. There are many ways through which the rich refuse to pay their fair share into the community's chest. Let's first get familiar with the examples of some millionaires and see how exactly they avoid paying taxes, and it is all legal. Stay tuned till the end to find out. Courtesy to ProPublica, the investigative journalism charity, we have a map of how the country's wealthiest individuals are avoiding their taxes. ProPublica claims to have gotten years of tax returns for the country's wealthiest people from an unnamed source. The first report of ProPublica exposes ex-President Donald Trump. He claimed losses to wipe out the income tax bills. The next person brought into the spotlight by ProPublica is Jeff Bezos. As Amazon CEO, Jeff Bezos earned roughly $80,000 each year. That's certainly not the same as claiming his fortune increased by $80,000 every year. One strategy for the ultra-rich to maintain more of their fortune is to keep their salaries low. Between 2006 and 2018, Bezos reported $6.5 billion to the IRS, while his net wealth increased by $127 billion. He had a net loss in 2011 and claimed the child tax credit. He is presently valued at $187 billion. In multiple recent years, he owed no taxes. While talking about the wealthiest persons, how can someone forget Elon Musk? He is the second richest human on Earth, having a net worth of $185 billion. Being a billionaire, he manages to get loans against his stocks, so his living continues on loan. Getting a handsome loan saves him from selling his stocks to get spendable money. He would only pay the tax if he sold his stock, but in the mentioned condition, no sales, no taxes. It is also surprising to know that the 25 wealthiest Americans increased their fortune by $401 billion from 2014 to 2018. They had to pay back 3.4% of the money in taxes. It contrasts this pace to that of a middle-class American in their early 40s whose wealth climbed by $65,000 on average during the same period. They would have repaid almost 95% of the money in taxes. From 2006 to 2018, the average American household spent more on taxes than it earned in wealth. The research by ProPublica also points out that a rise in house value accounts for the majority of middle-class Americans' wealth growth, providing an even starker image of how Americans who don't possess such assets are anticipated to see an upward trend in their wealth. Let's dig into the reason why it is all legal. Once, Buffett accepted and claimed that he paid lower tax than his secretary. Although he is wealthy enough to pay the taxes, he has $0 income tax bills. A famous event to mention here is, during the campaign for the Democratic presidential candidacy in 2020, Bloomberg clashed with Massachusetts Senator Elizabeth Warren about whether the government should tax extreme wealth in addition to income. The catch is that all of this tax avoidance is essentially legal. Tax avoidance is the use of legal techniques provided by the United States Tax Code to lower the amount of tax you pay. Meanwhile, tax evasion is an unlawful method for regular Americans to underreport their income or make other errors on their tax forms. The wealthiest individuals in the world don't make such blunder-prone decisions. For example, ProPublica points out that owning a sports club may qualify for a tax deduction. Philanthropy is another common technique for billionaires to decrease their tax liabilities, as it not only saves them money but also improves their public image. They can keep a lot of their money even after they die. The highest estate tax rate in the US is presently 40%, but, according to the research, many of the wealthiest form foundations for philanthropic giving, which allow huge charity tax deductions during their lifetimes and avoid the estate tax after they die. The foremost reason for the wealthiest not paying taxes is that the government imposes an income tax. At the same time, all this super wealth has nothing to do with income. All of their living is circulated in company stocks and investments. They are huge, but aren't taxable. The report by ProPublica mentioned the tax avoiding strategies used by the wealthiest. Rather than realizing the worth of an asset, the rich fund their lifestyles using loans secured by assets such as real estate or stocks. They'll pay less interest to the bank as compared to the government. During the interview with ProPublica, Cal Icahn quoted the following response when asked about his tax returns. "There's a reason it's called income tax," he said. "The reason is, if you're a poor person, a rich person, if you're Apple, if you have no income, you don't pay taxes. Do you think a rich person should pay taxes no matter what? I don't think it's germane. How can you ask me that question?" Being an investor, his loans were his income. Other types of taxation. It's also true that, because so much of their wealth is invested in stock, they essentially pay tax via their corporations. Nonetheless, the corporate tax rate of 21% is far lower than the maximum individual tax rate of 37% on income exceeding $523,000. Notably, Bezos has advocated boosting the corporate tax rate, which was reduced by Trump and Republicans in 2017. Still, as CNN highlighted, it's doubtful that Amazon will pay anything near to either rate. Even on the income that the super-rich do declare, which is frequently in the form of capital gains, they produce a lower tax rate than Americans who earn significantly less. Taxes are currently a hot topic in policy discussions. The notion is that if everyone had a corporation tax rate of at least 15%, firms would be less likely to avoid paying taxes. All of this adds to people's growing dissatisfaction with extreme inequality. The government is expected to focus on the payment of a fair share by everyone. But the whole situation is becoming complicated as more wealth is hidden from the taxman, and the government is not meeting the people's expectation to do more on tax reforms. Although disclosing an individual's tax information is illegal, ProPublica claims that the public interest in a well-informed tax discussion outweighs the danger. Bloomberg is described as pledging legal action against whomever or whoever leaked the records, rather than ProPublica, by a spokeswoman for at least one of the persons whose taxes it dissects. Some billionaire apologists say that net worth isn't affluent since a large portion isn't liquid, so they couldn't take billions from the bank right now. But that's a deceptive reversal of how wealth works. There's an old tale about Rockefeller being turned down for a loan because he didn't have verifiable credit at the time, which is meant to demonstrate how the credit system is supposed to treat everyone fairly. But does anybody think Rockefeller would have had difficulty borrowing any amount of money he desired? In reality, credit is mainly responsible for the success of the ultra-wealthy. While debt has become an awful burden for many Americans, it is ideal for billionaires to avoid giving up more of their riches because loans are not considered income. Earning a living is a trivial pursuit. The genuinely wealthy rely on debt to sustain their extravagant lives, with credit lines running into the billions of dollars. How much does an increased marginal tax rate tilt the scales? Given how the ultra-rich store their money in assets rather than income, and whether we tax it or not? How can we assure that billionaires contribute equally to our society when they continue to hide their wealth in overseas tax havens? Is this a defect that has to be fixed, like a dripping faucet, or is it a feature of the tax system, which contains so many special provisions that benefit the wealthy? Such questions make it seem that drafting the nation's tax law is akin to signing a yearbook with a joke. In the US, the inequality ratio between the rich and poor is growing day by day. A survey has proven that the after-tax income of the wealthiest has risen more than 400%. On the other hand, the payment of the middle-class man has only increased 50%. The money-making method of both sectors is way different. The tax-paying process of both sectors also varies. The major part of the population belongs to the middle class, so they pay taxes from the income they receive. But things are different with the billionaires. They make most of their income from investments. Stocks and actual states are top names in investments. The investments made by billionaires in the stocks are taxed as capital gains, but the tax on the stocks is of minimum value, just like 20%. For instance, if a person has sold stock for $400,000, the tax deducted will be around $50,000. This tax deduction on the stock sale rate is far less than a person who makes $400,000 per year would pay. So, billionaires hold a lot of money by owning many stocks because they are not spendable and taxable money. The system says that you only have to pay tax when you sell something. It means that you don't have to pay tax even if you make $1 million this year without selling. The stepped-up basis is a significant loophole in capital gains taxes that the wealthy take advantage of. Imagine, if a billionaire were to sell his stock, he'd have to pay capital gains taxes on the profit he made. As a result, the stock's cost minus the initial investment. However, if he waits until the end of his life to sell, whoever inherits the stock and then sells it will only have to pay taxes on what they gained after inheriting it. All of those first gains will be tax-free. Wealthy families avoid paying taxes by buying and borrowing. The fact that millionaires pay significantly fewer taxes than average wage earners demonstrate how money may act as a vacuum or a magnet. When you don't have enough of it, it becomes a type of black hole that absorbs even more cash. Being poor is more expensive than being rich. You'll spend more on banking fees, for example, and you'll pay more in interest, as well as paying more for everyday items. Meanwhile, having money lets you build firms that grow into giant global corporations that attract strong investors even when they aren't profitable. That's it for the video. We hope you like it. Don't forget to share your opinion with us in the comments section down below. And thank you so much for watching. Please subscribe to the channel, like the video, and press the bell icon for more amazing content about wealth management and finance-related videos. Success is coming your way. Keep your doors open. See ya till the next time.